So very good evening friends. Let's quickly take a look at one question from Ind AS 105. It was asked in here question 3a in May 26 Mark 1. So the question is following is the extract of, before we proceed with this question, when the questions run to 2 or 3 pages, you should be very careful on how quickly you scan the questions, because there is time management is all the way more important, because in exam there is literally no time for reading questions, thinking and all those things. Your pen should keep on writing. That is the main thing to complete full 100 marks. So keep these things in mind. So attributed goodwill 200,000, and intangible, all the figures are in thousands. Intangible assets 950, financial asset measured at VTOCA 300, PPE 1100, DTA 250, current assets 600, current liabilities 850, and non-current liabilities provision 300. Total comes to 2,250. So on 15th September 2021, NTTA decides to sell the business. It noted that the business meets the condition of disposal group classified as HFS on the date in accordance with Ind AS 105. However, it does not mean the condition to be classified as discontinued operations in accordance with that standard. So the disposal group is stated at the following amounts immediately prior to reclassification as HFS. So various figures as on 15 September 2021 are as follows: attributed goodwill 200, intangible asset 930, FET CA 360, and PPE 1020, and various other figures. The total adds up to 2160. So NTDA proposed to sell the disposal group at 19 lakhs. It estimates that the cost to sell will be rupees 70,000. So the cost consists of provision fee to be paid to external lawyers and accountants. As on 31st March 2022, there has been no change to the plan to sell the disposal, and the entity still expects to sell within 1 year of initial classification. Mr. S. X, an accountant of entity, remeasured the following asset liabilities in accordance with respective standards as on 31st March 2022. So the various details, the remeasured value is given. The disposal group has not been trading well, and its fair value cost to sell has fallen to 16,50,000. Compute the value of all assets and liabilities within the disposal group as on the following dates, that is 15th September 2021 and 31st March 2022. So this is the question. Let's quickly get going. What are the various mistakes you should avoid? So if you see in this question itself, if you see the solution given by the ICA, they themselves have missed out to mention the rupees in thousands. These things really adds up the value. You have to give more emphasis on these aspects. If you feel you might forget quickly, mention in the question paper itself what are the figures you're going to show in thousands, lakhs, and all those things. So that is specific reason why I'm sharing this answers with you. So pay full attention, make full use of it, so that you do not have to keep coming back to these questions again and again. So as on 31st March 15th September 2021, the disposal group should be measured at, that is the total cost minus cost to sell. So that will give you 19 lakhs minus 70,000, that is 18 lakh 30,000, and the impairment write down of 3 lakh 30,000, it should be recorded within profit from continuing operations. So that now the 3 lakh 30 will be first fully allocated to the total available portion of attributed goodwill, that is 200, and the balance will be assigned between intangible assets and PP. That is very, very important. I repeat, it will be assigned between intangible assets and PPE. So if you see the revised carrying value as per Ind AS 105 will be 1,830 and rupees in thousands. I repeat, I highlight that. So the impairment loss is allocated first to the goodwill and prorated to other assets, as you can see. So now the value will be 1,830. So moving on to the next part, as on 31st March 2022, so all the assets and liabilities outside the scope of measurement are remeasured as per Ind AS 105, and the assets that are remeasured in this case under relevant standards are out. If financial assets measured at FETOCA and the DTA, and the current assets and the various non-current liabilities as per Ind AS 37. So after doing these things, now the goodwill is already over. It has already been utilized as we did in the previous as on 15 September 2021. So now the balance will be allocated between the intangible assets and the PPE. So now the revised carrying value as on 31st March 2022 will be 1,650. That is it. This is the question. It's straightforward. It's a bit of application, and you need to ensure you write this theories. That is very, very important. For example, that all the assets outside the scope are remeasured as per the relevant standards. All these things adds up the value. So keep these things in mind. All the best. Keep going. Best wishes.